This penny stock is beating the Dow, S&P, and the NASDAQ year to date, and yet nobody is talking about it. Not only is the stock actually not doing bad, but when we look at their industry, this company has the potential to grow significantly over the next decade. So in this video, I want to share what is happening with SGblocks, how I believe the company should be valued, and share what I'm doing with the company, whether I'm buying, selling, or holding. But I don't want to waste your time talking about how you should destroy that like button. So with all that said, let's go ahead and dive right in. So SGblocks is a modular construction company that is focused on creating residential apartments, medical facilities, and a variety of other structures through their prefabricated modules. Now, I personally have owned shares of this company for over a year and a half now and have experienced all the wild things that have happened in that time. In January of 2021, the stock touched $8 a share, and even though there were some short spikes here and there, the share price has fallen all the way back down to under $2. So I'm sure many people were thinking that I should have sold at $8. And in the short term, maybe this was the case. However, because I believe their future market cap will be much higher than their current, I don't mind the short-term moves. But let's talk about what the company is doing right now and where I see them going. First, let's look at their numbers this past quarter, because on the surface, it doesn't look good at all. For Q2, they reported $7.6 million in revenue. Not only was this lower quarter over quarter, but this was a significant reduction year over year. In Q2 of last year, they reported revenues of $11.9 million. Now, as I said, surface level, this appears to be horrific numbers, but it's important to understand where these revenues are coming from. In the past, they relied heavily on their medical segment when COVID-19 was on the global news. However, now they finally started to shift to their main part of their business, which is the construction side. Even though they lost over $4 million in revenue, much of it coming from medical, they grew their construction segment by 104%. This has made their company much more diverse, as 56% of their revenues came from construction, growing from $2 million to $4.2 million, and the other 44% of revenues came from their medical segment. And one major thing that I talked about last year is that I didn't care too much about these first few quarters of 2022 because their main business segment, which is why I invested, wouldn't really start ramping up until the very end of 2022, but more so in 2023. And what these numbers are telling me is that they are really starting to focus and prepare for their major contracts that they have coming up. Also, if we compare the revenues from 2 years ago to now, they have grown over 12x. And how many companies do you know can actually say that? Now, when we talk about the medical vertical, we need to understand that there is a shift in the company's focus, which allows them to still generate revenue in this segment. Rather than focusing on COVID care, they are moving toward point of care, which is a form of testing that is performed where healthcare is close to or near a patient. Also, it's important to note that this will be new for them, but if they execute well, they could generate recurring revenue, which would be really nice to see. Looking at the balance sheet, the company has only $2.4 million in cash, which is lower than last year, but they also have $4 million in an escrow bond and another $2.5 million in accounts receivable. In terms of debt, the main ones that I want to cover is the $2 million in short-term payable note and the $750,000 in long-term payable notes. Now, the thing about SGblocks that I have to mention is we need to understand the business of construction and real estate. Unlike other sectors, SGblocks needs to spend more in upfront costs and wait longer for their returns. And this is more so going to be important when we start talking about the larger residential projects. When someone is building from scratch, they will not only need the resources, but also the funds to build. And they will not start making money until those projects have been completed and are starting to sell. And this is why I've said a few times when I talk about this stock, if you don't believe in the team's execution, then this company is not for you. When I evaluate this company, even though there have been some hiccups, the amount of manufacturing space and deals that they have been able to receive despite these hurdles is proving to me that they will be able to execute. Now, with all that said, the company estimates their manufacturing pipeline is at $765 million. This doesn't mean that they will get their entire pipeline, but there's definitely potential for them to generate significant revenues over the next 5 years. Now, here is something that I need to specify. These projects will not generate solid margins until much later. What they are doing now is use their margins from their medical vertical and take that money to invest in their construction business. But once we begin to see revenues come in from their major projects, their margins will begin to show as well. These margins will be the open book cost plus 15% of the $765 million in their pipeline. However, as I said before, they need to execute on these contracts, because anyone can say what the numbers will be, but until they get the job done, these numbers won't count for much. Now, what I'm really excited about when it comes to Sgbx is the kind of revenue that they will be able to generate. Because they're in the real estate development space, they will get revenue from their sale leaseback for their factories, which is when someone sells the asset and then leases it back for the long term, plus developer fees, refinancings, asset sales, and operating income from these projects. As someone who is a real estate investor, the different income streams gives Sgbx not only diversification for safety reasons, but it also gives them the opportunity to pivot in case market conditions change. And we've seen this with their Lago Vista deal. There was so much appreciation that it made more sense to sell and reinvest that money elsewhere. So there could be times where the company had several different projects and each one of them could have a totally different exit strategy after completion. And that leads to their recent news, and let me tell you, a lot has gone on over the past month and a half. A few days after the Q2 report, Sgbx announced Lago Vista is under contract at full asking price. This is certainly exciting news because they have already talked about what they're going to use the cash for. But here's something that I need to specify. They are under contract, so the deal has not officially gone through. And a lot can happen between now and when they close in Q4, at least that's when they're expecting to close. On August 22nd, they closed on their 22-acre St. Mary's factory project, which will help them build the massive 1,286-acre waterfront community. Now, please know that this project will take them some time, so don't expect this one to be completed in the next couple of years. They will be breaking ground on this factory project in Q2 of 2023. But I think one of the biggest pieces of news is on September 7th, Sgbx announced that they have increased their share buyback program to up to 1 million shares. This is huge news and something that I believe many investors were extremely excited for. I mean, any company who does share buybacks proves that they believe in the company long term and that they will have enough cash to continue to grow the company. Now, the news that I personally was really interested in is their appraisal releases on September 12th. What truly determines the value of a company? Is it revenues? Is it net income? Is it the amount of cash on the balance sheet? Or is it even gross margins? If we look at McDonald's, for example, they are valued at almost $170 billion. But when we look at the revenues over the past year, they had about $23.5 billion. But here is something that the former CFO said about this company. We are not technically in the food business. We are in the real estate business. The only reason we sell 15-cent hamburgers is because they are the greatest producer of revenue from which our tenants can pay us our rent. I absolutely love this because when we look at the bigger picture, a company's real estate plays a huge role when it comes to a stock being undervalued or not. Now, of course, you still need to include things like revenue growth and net income, but I firmly believe that real estate is not talked about enough within the stock market. So when we look at the appraisals, here's what we got. The manufacturing facility in St. Mary's has an as-is market value of approximately $2.4 million. Their Norman Berry property has an as-is market value of $5.5 million. With their McLean site, they have two different parts. First, their apartment site appraised for $3.7 million and their industrial business park appraised for $16.2 million. And lastly, their St. Mary's big multifamily project has an as-is market value of $3.4 million. Just looking at some of the projects that they're working on, these are the as-is values right now, before construction. And this is important because the appraisals after completion are massive. So I encourage you, if you haven't done so already, look closely at these appraisals and see where they are right now and the potential that Sgbx has within each project. The last thing that I would say about these appraisals is keep in mind that they have partnerships. So even though these projects are valued at where they are split amongst their partners. Regardless, the kind of properties that they are working with, as well as the kind of revenue that they could generate from either selling or renting is massive. And that is why I love the fact that Sgbx is open with each property when it comes to their exit strategy. To wrap up the news, Sgbx announced that they are adding another US military client. Now this project is small, with about $750,000 in the contract. But this goes to show that they are still working on multiple verticals. Now, one thing that I've said numerous times that I think is a caution flag everyone needs to consider is that they have a lot of different verticals, and this could be a cause for concern. When companies, especially smaller ones, begin to diversify a little too much, some of their projects begin to lag. With Sgbx, what I don't want to see is that they put more effort into a different segment from their real estate business, and those bigger projects begin to slow down. I don't don't think that this is a reason to sell because as of now, they are demonstrating progress in the real estate segment, but it is still something to consider and keep an eye on in my opinion. When it comes to their most recent news about their collaboration with Enriched Data, I don't really have much to comment on because this is something that is still being developed. And until we really have their finalization for their plans, we really won't know what this means for SG Blocks and their real estate business in the future. So what exactly am I doing with SG Blocks? Well, for a while, I was holding my shares because they were my most stable company while many of the other companies were getting absolutely destroyed. So I just kept adding to those positions. But now that SG Blocks is back under $1.80, I will be adding a few shares. I have this position already built out, and I still like the valuation for several other companies that haven't been fully built out yet. I think until we really start to see how well they execute on those verticals, there's still a decent amount of risk involved. But the fact that the company is buying back shares, they are versatile when it comes to their exit strategies, and they continue to grow their manufacturing space, I think this company has put themselves in a tremendous place to grow for the next 3 to 5 years. And those are my thoughts on SG Blocks. I would love to hear your thoughts on anything that I mentioned, so feel free to comment down below. Lastly, if you're new here, hit that subscribe button and notification bell. That way you're notified when new content comes out. Hope you all enjoy the rest of your week, and I'll see you in the next one.